Hello, I'm Tai Hui, the Chief Market Strategist for Asia Pacific from JP Morgan Asset Management, and welcome to this video discussing our asset allocation recommendations from our third quarter 2020 Guide to the Markets Asia. Now, the strong rebound in risk assets, including equities, corporate credits, and emerging market fixed income, reflects market expectations that the global economy has passed its worst because of COVID-19. While we agree that the economy is bottoming out, we think it will still take a long time and sustained solutions such as a vaccine or efficient testing for economic activities to resume fully. What does this mean for Asian investors? Asian investors should look for a more balanced portfolio between equities and fixed income. Equities' long-term outlook is improving as the economy finds a bottom. Some of the sectors that have underperformed could also catch up, such as industrials and financials. The worst-hit sectors, such as energy, airlines, and travels, will need to see more evidence of life returning to normal in order to enjoy a more sustained support. Overall, we remain more upbeat in Asian, China, and US equities. We also want to emphasize the importance of active management in this environment where sector performance can vary significantly. In fixed income, developed market government bonds valuations are already rich. While central banks should continue to keep monetary policy ultra loose, we expect them to maintain rather than step up asset purchases. This implies government bond yields are likely to stay in a range. Investment-grade corporate credit spreads has also returned to its long-term average. That means investors should look for high-yield corporate debt in emerging market debt. We shall discuss these two fixed income asset classes in more detail in our next video. Now, despite better economic news, investors will also need to pay attention to some of the uncertain factors in months ahead. While the COVID-19 pandemic is slowly being contained in the US, Europe, and Asia, the risk of a second wave or the second round of economic impact from high unemployment and bankruptcy needs to be considered. Tension between the US and China is rising again. Investors will also pay more attention to the US presidential and congressional elections in November. This is why we think investors should maintain a balanced portfolio to manage volatility. To summarize, the good news is that the global economy should slowly improve in the months ahead as economies reopen. But still, there are challenges ahead that will require investors to stay disciplined and pay attention to some of the risk factors in front of us. This requires a more balanced portfolio with active selection in both equities and fixed income. Thanks for watching. If you want to get a copy of the latest Guide to the Markets Asia, please reach out to your JP Morgan Asset Management client advisor.